You're locked in to the Grain Market Talk podcast. Fast updates, market movers, and the grain news you need right now. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
This is Mike Miner, and I've got Pat back with us here today on a sunny afternoon on Friday. How's it going?
Good. Mike is keeping me in the podcast room when it's 75 degrees out on a Friday afternoon.
We'll try to keep
slave driver he is.
We'll try to keep it 10 minutes or shorter, Pat. It's not like we have anything important to talk about on these grain markets here this week, do we?
Well, we do have a little bit of volatility finally, don't we not?
Yeah, it's only taken a minor war in the Middle East again, but we got something brewing.
Indeed. Yeah.
Let's talk a little bit about we'll do broad overview of the Iran conflict, impact on agricultural commodities, specifically, Pat, but we can dive in a little bit later to maybe what this means for planning, fertilizer, weather, things like that going forward. So let's start with what you're seeing anyways out of the corn and soybean market on some futures. A lot of volatility this week. And anything clear or clean you see from some of the activity? I mean, Monday, we haven't done a podcast since we had a limit day on Monday out of the soybean market on May and July. So what was your take at the start of the week?
Sure. As we settle up this week, Dees corn is a solid close above 490, a little bit of a correction today, but a nice little rally in the new crop option months that we've experienced over the last little while here. And when I think about this market, Mike, I keep thinking about like multiple layers, and you know the first layer that I think is important is just the recognition that we've built and experienced some pretty nicely sized crops for multiple years here, and I've mentioned this on the last couple podcasts. But over the last 3 years, I could argue that really both hemispheres we've had either trend or above trend crops. We really haven't had a crop problem for a while, and so just as it relates to we're due like maybe we'll have a weather problem. That's fair enough, and maybe there's some truth to that. Statistically, probably not. But the point is there's not very many times in my career where I've been able to say that. Well, gosh, we've had 4 years or 5 years or 6 years in a row. We haven't any crop problems anywhere. Brazil's fine, Argentina's fine, U.S. fine, China's fine, all that. And so anyway, we might be a little bit due, but perhaps more importantly to that observation is that when we look at world or global ending stocks on feed grains, it's comfortable, right? But it's not burdensome. And it's not burdensome in spite of the fact that we really haven't, we've grown some nice crops. And so in a little bit of a quiet, sneaky way, corn demand has really been pretty good. And that, I would argue, is especially true domestically, right? I mean, we've our balance sheet, while it too is comfortable, again in quotes, it's not burdensome and could have been with a couple of, like last year's crop, the final yield with acres, holy smokes.
Not like Brazil's been letting off the gas either.
That's exactly right. And so anyway, that's interesting. And that isn't, again, some prediction of a weather problem this summer, but if or when trend changes from trend to above trend type crops somewhere, the market's going to be forced, I think, to react to that. So that's one layer, an important one, right? The second layer, you mentioned Middle East and Israel and Iran and war and all that stuff, and I too kind of think that the administration maybe got caught a little flat-footed on this thing. I think they were maybe believing a little too much that this could be closer to Venezuela than something else. And obviously, clearly, it's something different and more than that. I find myself now thinking more about, plenty of discussion about the Strait of Hormuz and it being closed and the impact that has on logistics and oil movement, all those things. And I leave that to everybody else to analyze and talk about. But I think what's important now to be considering is that we've done some significant infrastructure damage.
Much more long term.
Much more long term, right? I mean, a couple of those natural gas facilities and LNG facilities that were destroyed this week, that likely has a long term lasting impact on nitrogen fertilizer supplies.
And that's
globally.
been the story the last 2 days, probably, has been just energy infrastructure getting taken out through a few of those regions, whether it be Kuwait, which was kind of a big deal, Qatar, some of those places, along with the others now over the past probably 24 hours has been getting talked about a lot more. Pat.
Exactly right. And so there's another layer. And so then I would just say that if this was a 2-day deal or now it's not a 2-week deal and it's a 2-month deal, or if it's a 2-year deal, I'm not sure. But regardless, it doesn't seem like crude oil is going back to $70 anytime soon and just going to hang out there, right? Yeah. And so that just has a material structural change in what the base value of corn is worth potentially, right? So there's another layer, and then the third layer is, as we're just talking about what corn is worth, you still also have this discussion about inflation and wage inflation and what the Fed's decided to do this week again and all of those things, but just more chatter about, and we've talked about this a lot with our clients this week and some other experts in the field, if you will, but there's the commodity space is still the commodities that we care about, right, is still relatively cheap when adjusted for inflation over the last 10 years or so. And so anyway, money flow is always something that we like to keep an eye on, and there's been a little activity in that space, and there could be more, right? We just say all of those things, and we're just talking about 2 or 3 different layers in the corn market. And then the last thing that I would just say about this is that, Mike, it's not uncommon for us to have these conversations this time of year, right? From a seasonal perspective, putting 20 cents on corn or 25 cents on corn from Jan to March, leading into acreage intentions, leading into our spring and more volatility with weather. Yeah, that happens. Yeah. Happens a lot, right? And so anyway, I guess that I'm just, again, trying to kind of wrap a circle around the whole conversation. Like all of the things that we just talked about, I think make some sense for consideration, but I think it also is a relatively normal thing for us to see a little bit of volatility in these markets this time of year.
I've been trying to do the impossible, which is see how long the markets care. Like if this pattern kind of continues, or if it's pretty mellow here, how long is corn going to care that crude oil is around $95? That's a huge question in this. And part of the answer, Pat, might be some of the dates that we're looking at going forward. And I feel like this week we really saw it, which was we came out of the weekend and Trump's team's conversation with China saying that they're interested in still buying U.S. commodities, agriculture-wise, just not soybeans. And we were down limit. So they obviously cared about a fundamental on Monday. And throughout the week here, spreads actually mattered a little bit. They told us a similar story. We traded that through most of the week, that they're probably not going to buy old crop soybeans from us. Makes sense. We're $2.50 too expensive. Yeah. Totally get it. The few dates I'm looking forward to 11 days from now is prospective plantings from the United States, which just got, in my opinion, way more interesting on Indeed. Corn, and especially. So like if Cade pulls up the balance sheet with just what are a few different examples of like what 92, 94, 96 million corn acres looks like, they're pretty different stories, Pat. I mean, you start to talk about that 95 million acre mark. Anything below that starts to drop you below 2 billion bushels next year for the carryout. Anything above 95, basically, you're still sitting in around $4 corn futures historically. So when I start to look at some of the key dates, the first one would be this, prospective plantings on March 31st. Then obviously right after that, Trump is going to also have that meeting that got put off a little bit for his meeting with China. Yep. And that's going to be another key date to talk about. And then you're planning. I mean, April 10th, we start talking about planning progress. And Cade, you can pull up the drought map. It's pretty dry out there, really. I mean, you talk about the United States, almost half the corn crops in a drought for production right now. Typically, that would say plant in the dust, bins will bust. Normally, that would say super fast planting pace. You probably end up planting more corn acres. And really, corn price is pretty good right now, too. But now we have another extra layer in that, which would be the fertilizer discussion, which how many acres do we lose from that, so to say? I'm viewing it more like I don't think we're going to lose acres because of the fertilizer situation. I just don't think we're going to gain extra acres if we have fast planting pace because of the fertilizer situation, Pat. It'll be a little bit up in the air, but I'm excited to at least trade a few of those things again in our near future, other than just, what was bombed today, what crude oil's doing, some of those outside market activities.
Very well said, and agreed. I think that we and again, I think I can add to that discussion with the same observation, which is we're moving into that time of year where those things start to happen, right? Like we do start to pay attention to weather and planning progress and all of those things. It's the right time of year to be focused on that.
Any final thoughts for our listeners this week for the grain side?
Well, look, I just this discussion as it relates to what's going on with the grain markets is fun, hopefully somewhat entertaining and interesting for our listeners. But in terms of application, please give us a call. Please, let's talk through how we can work through what we believe are current market fundamentals and make some good, sound risk management decisions for your business. And with volatility is up, that's a good thing, right? And sometimes we get a little frustrated with the algorithms or whomever, like moving the market around on the latest Trump tweet or whatever. But through the years, we've had really good luck, haven't we, Mike, of taking advantage of that volatility and creating good opportunities for our customers. And we sure would appreciate the opportunity to engage.
Especially on the row crop side. And I feel like that conversation's probably easier right now. The end user side, I mean, we really need to talk to end users right now just about that's a tough conversation with what to do going forward.
Absolutely.
All right. Thank you, Pat.
Thank you.
If you are interested in this content or anything else around this topic, please click the description link below and go get our free daily market commentary that we send out Monday through Friday in the morning every week.